So, very good afternoon to one and all. I, Dr. Tanushri, welcome you all to the IIC and ED Cell workshop on raising capital and managing finance for startups. This activity is being conducted under the aegis of IQAC by the IIC Institute Innovation Council of IIMT College of Law in order to inculcate a spirit of innovation and entrepreneurship among its students. Today, we are blessed to welcome Dr. Alok Kumar Verma sir, Assistant Professor from Maharishi University of Information Technology, who has kindly consented to be our guest for this session, this workshop on raising capital and managing finance for startup. Heartiest welcome to you, sir. I request you to please proceed with the workshop.
Thank you, ma'am, for giving the opportunity to present a very important discussion of very important topic, raising capitals and managing finance for startup, because it is a very important topic for the the current students. So regarding this, the how to raise fund. This is for a startup, very important topic because no one know about the how to raise the fund for a startup. So entrepreneur can explore several options, including post bootstrapping, seeking investments from family and friends, attracting angels investors, pitching to venture capitals, crowdfunding, and applying for grant or loans. These are very example. These are some examples for the do to fund for raise. So here are other important points like bootstrapping. In this point, this involve using personal savings, investing profits, or using other cost-effective methods to finance the business. If you start any business, it is very important how to involve using personal saving, because if you look at the society, some people have their personal savings, so it is very important to start some small startups. So friends and family, these are very important points also. People sometimes some money get from friends and family members also, borrowing from or receiving investment from close contacts can be an initial sources for funding. It is very important point. Other very important point is angel investors. These are high net worth individuals who invest in early stage startups and often providing mentorship and guidance alongside capitals. When people start a small capital, so a small startup, it is very important point to know how to raise fund. And venture capitalists. Venture capitalist firms invest in high growth potential startup, typically in exchange for equity. And crowdfunding. Crowdfunding is also very important. This involves raising relatively small amounts of money from a large number of pupils, typically through online platform. Some people, raising these points also. Grant and competitions. If you start any small startup or a big startup, how to give grant, how to get grant and competition is very, high competition in the society. If you talk about the present context, many government and organizations offer grant and business plans competitions that provide non-rep level fundings to startups. There are a number of startups and there are a number of agencies and companies. They are, grant based. So how to start a business loan? Business loan, how to get traditional bank loans or alternative leading options can be used to finance a startup. It is very good option for the startup business loan. So, okay, how to get a business loan? Another important point is government scheme. Government scheme is also very important in some regions. Government offer a specific loan schemes or subsidy to support startups and small businesses. If you look at the present context, Government of India has started a number of schemes for the small startups and big startups. If you have knowledge about this, you can start, you can get apply for the loan. So funding refer to the money required to start and run a business. Funding is most important because if you have not funding, you cannot start any startup. So it is a financial investment in a company for product development, manufacturing, expansion sales, and marketing. Office space and inventory. These are also very important part for startup. Many startups choose to net raise funding from third parties and are funded by their founders. These are very important also. However, most startups do raise funding, especially as they grow larger and scale their operations. I might require funding for one or a few or all of the following purpose. It is important that an entrepreneur is clear about why they are raising fund. These are very important points. So founders should have a detailed financial and business plan before they approach investors. Apart from the several managerial and regulatory challenges, one of the biggest problem faced by startups is easy to access to early startup debit to finance their capital requirement. It is a very important part, the several managerial and regulatory challenges. There are lots of challenges. So traditional leading institutions such as commercial banks rely on same old mandate to facilitate funding for startups. There are traditional leading fundings. There are some institutions who get the funding for a traditional way. So prerequisites such as promoting credit history, establish reputation, and most importantly, the requirement of collateral are expectations that most startups by default cannot cater to. Within the practical implications of such challenges hampering startups in raising debts, there has been a requirement to facilitate their process for budding startups looking for growth and expansion. So here another very important point is types of funding. There are a number of types of funding are available. So first, like equity financing involves selling a portion of company's equity in return for capital. There is no component for repayment of their invest funds. A startup basically needs to give a portion of their ownership to shareholders. Startups are under less pressure to adhere to a repayment timeline. Investors are constantly trying to achieve growth targets. And debit financing involvements are, browsing, borrowing of money and paying it back with interest. Invested fund to be repaid within a stipulated time frame with interest. The lender has no control over the business's operations. Startups may need to provide a business assist at collateral. Startups need to constantly adhere to the repayment timeline, which result in more effort to generate cash flows to meet interest and repayment. Another very important point is a grant is an award, usually given by an entity to a company to facilitate a goal or incentives performance. There is no component of repayment vested funds. There is a risk of a startup not meeting with the goal or objective for which the grant has been provided. There is a risk of the startup not receiving a portion of grant due to several reasons. Grants are basically distributed in different tranches with respect to the fulfillment of corresponding milestones. Thus, the status is constantly working to achieve the milestones laid down. So the startup need to assess why the funding is required and the right amount to be raised. It is very important. First of all, why you need to require for funding. Another very important point is how much amount you need. So the startup should develop a milestone-based plan with clear timelines regarding what the startup wishes to do in the next 2, 4, and 10 years. So first of all, if people start any business, small or big startup, first of all, in their mind, how much amount they need, and which type of startup they want to start. So a financial forecast is carefully constructed projection of company development over a given time period, taking into consideration projected sales data as well as market and economic indicator, because it shows all the things. If you have not any plan, so your startup will be fail. So first of all, you need to plan according your startup, all the things. The cost of production, prototype development, research, manufacturing, etc. should be well planned. Based on this, the startup can decide what the next round of investment will be for. So, of course, investors essentially buy a piece of company with their investment. They are putting down capital in exchange for equity, a portion of ownership in the startup and right to its potential future profits. So, investors from a partnership with the startup they choose to invest in, if the company turns a profit, investors make returns, put notes to their amounts of equity in the startup. In the startup fails, and if the startup fails, the investors lose the money they have invested, of course. So that is why earlier, it is fake. So investors realize their return on investment from the startup through various means of exist. Ideally, the VC firm and the entrepreneur should discuss the various exist options at the beginning of investment negotiations. A well-performing high-growth startup that also has excellent management and organizational process is more likely to be exist ready earlier than other startups. There are other important points like venture capital and private equity funds must exist all their investment before the end of the fund's life. Here are a very important point which I'm going to discuss to you. So Department of Promotion of Industry and Internal Trade, DPIIT, has created the Startup India Seed Funds Scheme, SISFS, with an outlay of NR 945 CR, which aims to provide financial assistance to a startup for proof of concepts, prototypes development, product sales, market entry, and commercialization. This would enable these startups to graduate to a level where they will be able to raise investment from angel investors or venture capitalists or seek loans from commercial banks or official or the financial institutions. The scheme will support an estimate 3,600 entrepreneurs to 300 incubators in the next 4 years. So this is very good scheme for the new startups. The seed funds will be dispersed to eligible startup through eligible incubators across India. It is applicable across the India. So the government of India established the credit guarantee scheme for a scheme with the fixed crops for the providing credit guarantee to loan to DPIIT recognized startup by scheduled commercial banks, non-banking financial companies, and venture debt funds under SEBI registered alternative investment fund. These are very important government funds which provide for the startup. Another very important point is CSS is aimed to provide credit guarantee up to a specified limit against loans extended by member institutions to finance eligible borrowers, while the startups as defined in the gadget notification issued by DPIIT. These are the gadget which provided by the DPIIT and amended from time to time. It also amended by the time to time. The credit guarantee coverage under the scheme would be transaction-based and umbrella-based. The express to individual case would be capped in our 10 crore per case or the actual outstanding credit amount, whichever is less. So the Startup India initiative offer various loans options startup in India, including government-backed scheme and provided financial avenues. The Startup India, for example, provide loans between 10 lakhs to 1 crore to the women, scheduled caste, and scheduled tribes startups. Additionally, the Startup India Seed Funds scheme offer grants for early stage developments and loan for scaling up. Here are some important tips for managing fundraising, how to raise fund for the government of India and some other important companies. To be clear on your startup unique offering, target market and abilities. First of all, you need to clear all the things in your mind. Okay. Then you can apply for the fund. Or so these factors really paint the picture of who, what, and why of your business. Who is your private or your primary evidence? What problems do need to a solution for? And what kind of meaningful impact does your product or service offer? But it means these things will be in your mind. After that, you apply for the funds. Another very important point is relationship building is the key. It's very important and key point how to build a relationship. So relationship build one's network and founders network are crucial drivers for their business success. It is a success of your business, relationship. So founders network can unlock new investors, business partners, and client. Moreover, a founder reputation is an important part of their brand. It is very important because if you do not start, do not very important. So it is, VC wants founder to be people they want to work with. Right? Burning bridges. This is very important point on a startup business. If you not avoid type of burning bridges, you cannot success. So being a founder come with ups and downs. Ups and downs is also the part of your business. However, founders should understand that the venture capital woods is much smaller than it may appear. So a founder should aim to not ruin any relationship, no matter how upsetting a situation may seem. Another important point is expect to talk to a lot of investors. Okay. This is very important because patience and perseverance are the key factors of any startup. Founders should also see these meetings as an opportunity to assess if and how the investor could help as an advisor or mentor. Don't take it personally because rejection is a part of your process. It is very clear in your mind. Investors are assessing how an investment fit into their portfolio, which means there are a number of factors they are considering outside of considering investing in a startup like portfolio mix. So the managing a startup with finance is stressful. So founders should make sure to carefully set up their own finance so that they do not need to worry as they navigate the startup ecosystem. So these are the very important points which I have discussed to you regarding the very important point how to start up and raising capital, managing finance for the startup. So I would like to stop here. Thank you so much.
Thank you so much, sir, for this very insightful and knowledgeable session. So on behalf of IMT College of Law, I extend a very heartfelt thanks to Dr. Alok Verma sir, who has kindly consented to be our guest today and given us his valuable time and efforts. It was very wonderful session, sir. And we will be posting you the questions in case any student has any. So once again, a very heartiest thanks to you, sir. Thanks for joining us.
And thank you so much, bro. Thank you.